The biggest story in real estate this year has been the skyrocketing interest rates. Hang with me for a few minutes and I will unpack what that means for people in the market to buy a home and give you hardcore data to show you why buying a house now could be a great move for your lifestyle and your bank account. Interest rates for home loans started the year in the mid 6% and rocketed to almost 8% by the fall. This shock to the system slammed the brakes on the local real estate market. Home prices were already high, and the market was starting to recover from a buyer's frenzy that was created by low interest rates. The North Dallas real estate market became a rickety roller coaster ride, and buyers became reluctant to get in, and the volume of deals dropped to pre-pandemic lows when it took months to sell a home in some areas. Most buyers decided to sit it out till the rates dropped, while others wondered, is now a good time to buy a house? Look, as of today, the rates have dropped from the high 7s to the mid 6s, and the Fed has even said that they're going to reduce them even further next year. You can get a rate even lower if you work a special deal on a new build or negotiate an interest rate to buy down with the seller of a pre-owned home. In my humble opinion, now is a great time to buy a property. Why, you may ask? That's a great question. If you're in the market for a new build, now is a great time to buy because builders are making crazy deals on their pre-built inventory. With just 2 weeks left in the year, most builders don't want to go into the new year with those properties on their books. So they're cutting prices, offering low interest rates, and a truckload of other incentives to liquidate those properties before the new year. In some cases, they are knocking tens of thousands of dollars off the purchase price just to move the merchandise. The trade-off is that even though it is a new build, you won't get a chance to select any of the things like cabinets, elevation, or interior styles the way you would on a to-be-built home. Sellers of previously owned homes are willing to provide more concessions, seriously consider making more repairs, and are generally more open to negotiating more aspects of the agreement just to close the deal. It wasn't that long ago when the market was so hot that each seller had multiple offers to consider, and homes normally went for more than the list price. This put the sellers firmly in the driver's seat, inspiring them to make take it or leave it conditions for any offer that they would seriously consider. But that ship has sailed, and they're singing a more accommodating tune now. The housing inventory in the DFW Metroplex has been tight, and that is what has kept the price point as high as it is. The demand is still there, just not as frantic as it was when the interest rates were lower. Unless something has gone terribly wrong with the economy, housing prices will not drop. History has shown us that even the past recessions, housing prices have remained stable and increased considerably when the economy recovers. The last major hit to home prices, where buyers found themselves upside down in their mortgages, was in 2008. But that was caused by a once-in-a-lifetime housing market crash that spawned a series of laws and policies to prevent that from ever happening again. However, those homeowners who momentarily found themselves upside down in their mortgages in 2008 got quick relief when the market bounced back a couple years later. It wasn't long before property values more than doubled. Home ownership is not all fairies and unicorns. There will be challenges and obstacles. I know that buying a home can be a great investment, serving as the pot of gold at the end of your rainbow. Buying right now could benefit you in spite of the interest rates, because when you purchase a home now, the purchase price is locked in, but the interest rate is not. As a buyer, it gives you an advantage. Let's look at what that means. Now, I want you to take something into consideration. Today, the median home price of a home in Texas is $484,900. So let's round it up to $485,000. Today's interest rate is 6.8 for a conventional loan. And if you were to purchase a house today at $485,000 with 10% down, you'd have to come to the closing table with approximately $58,900 and a monthly mortgage of about $4,100. Now, let's say you wait till the interest rates drop, and it drops a whole point to 5%. But It's taken 6 months for the rates to drop. And in that time, the market has heated up. So property values have increased by 4%, making it like $20,000. So that same house that's $485,000 has increased to $504,000. So you have to put $60,000 down, but your mortgage is about $3,200. So it appears it's only like a $2,000 difference in the down payment, and the monthly mortgage is about $370 less. However, if you bought the house at $485,000 and refinanced the loan when the interest rates drop, your mortgage payment has the potential to go from $4,100 to $2,600 a month. You've just given yourself almost a $1,500 a month raise, and you're living in the community that you want to be in. Plus, you've picked up the $20,000 in equity since you made the purchase. It's an investment that just made you money just by you living there. The issue of paying more in the short term may mean you have to sacrifice. However, to live like no one else, you have to live like no one else. It may take a bit of sacrifice and discipline, but in the long run, it is worth it. The opportunity in this market is counterintuitive. Yet, if you allow yourself to march to the beat of a different drummer, you can create opportunities for yourself. If you would like more information about buying opportunities, just click in the link in the comments below. I will be happy to connect with you directly and design a strategy to assist in your home buying journey. I'm Brandon Bates with the Honey Rock Real Estate Group, the best part of eXp Realty, here to help you live your best life now.